Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1428, and today's date is November 8th, 2017, and the title of the episode is Housing Bubble Confirmed. It's the same cities as the last housing bubble. Let's get into the economic collapse financial news. Now, we've been talking about the housing market for quite a while. We've been tracking it, we've been watching it, and we've been watching it slowly deteriorate where the bubbles have been blown up, where prices are reaching that same point, and actually they have reached the same point, and in many cities they're over that point of where we were in Housing Bubble 1.0. Now remember, in Housing Bubble 1.0, house prices in the most lofty regions have been driven for years by non-end users speculating on rentals, second vacation homes, flipping, and everyone was riding the wave of cheap and easy credit. And what happened was everyone got burned because they believed that this was going to last forever, it was never going to end, and all of a sudden everything came crashing down. And what happened was the people who purchased homes, who were actual home buyers, they bought with variable interest rates. Interest rates were very low at the time, and the Fed started to raise the rates, and people realized that, well, wait a minute, my interest rate is going up, I can't afford this anymore, and they started to leave their homes. And what we're seeing now with Housing Bubble number 2, which is Housing Bubble 2.0, we are seeing the same things. If we look into the same exact cities, what we're seeing is the same exact thing occurring. And in these cities, we're seeing bubble-like conditions once again. And these cities are San Diego, New York, San Francisco, Los Angeles, Boston, Miami, Detroit, Denver, Dallas, Philadelphia, Baltimore. And when we look at the average increase of price nationwide, it's 6%. If we look at the average of the key cities of where we're seeing the bubbles, it's 42%. This is a very big difference. And what has happened here is that they needed to inflate these bubbles in these cities, the same exact cities that happened with Housing Bubble number 1. They needed to bring them back to where they were to make everyone feel like everything is okay. This way, Kay Schiller can go out and report that housing prices are moving up again, the housing market is doing well, and everything is fine. And what we're seeing is that this has been manufactured to make everyone believe that this is happening. Remember, the housing market has been pumped up. Speculators, foreign buyers, hedge funds, investment companies have been purchasing homes for quite a while. The everyday American, they've been sitting on the sidelines. And what we're seeing right now is that the everyday American, they can't afford any of these homes in the cities. If you go outside of the cities, we are seeing that housing prices, well, they're not going up as fast. Actually, in many areas, the housing prices are starting to fall, and houses are staying on the market longer and longer. And we're getting confirmation that this is all true. Now, of course, when we first started discussing this, everyone was like, no, I'm not seeing it in my area. I'm not seeing it in North Carolina. I'm not seeing it in Florida. I'm not seeing it in New York. And now people are writing in saying, yes, it has hit my area. I'm outside of these cities. We're starting to see that houses are staying on the market. People are dropping their prices. And this is what happened during 2007, 2008. People didn't understand what was going on. They couldn't figure it out. They had no idea, what was going on. Realtors were scratching their heads because one minute they were bringing busloads of people in to look at homes. The next minute, they couldn't find anyone to look at the homes. And it's the same exact thing. It's not going to be different this time. It's actually going to be worse this time. We're seeing Lending Club. They have crashed to near record lows after slashing guidance. Why? Because Lending Club is struggling to originate high enough quality loans. And they crashed almost 20% after slashing their fourth quarter outlook. And it's not the only financial institution. Morgan Stanley is doing the same thing. We also see Wells Fargo. Their mortgage lending is declining. And what we're seeing right now is the beginning stages of this entire system starting to break down. Now, if we start to put all this together, if we start to look at retail, which we've been looking at quite a bit, if we look at manufacturing, the GDP numbers are completely meaningless because those are completely manipulated. I'm talking about the actual manufacturing. If we look at automobile manufacturing and the sales of automobiles, that is declining. We're seeing that many of the plants are being shut down. People are being laid off. And what is happening is they stuffed the lots, the dealership lots, with many, many vehicles. That's what counted as sales. It's not when the dealerships sold the cars. Plus, the American manufacturers, they are giving huge incentives for people to purchase these automobiles. We saw this once again back in 2006, 2007, 2008, and all of a sudden the CEOs had to go to Congress and ask for a bailout. The same thing is happening once again. And now we see the housing bubble, the housing market, with the same exact cities that we saw housing bubble 1.0, it is happening once again. And the whole thing is starting to fall apart. Now, we understand that everything is moving from the west to the east because the whole system is breaking down. There's no way they're going to be able to keep this system alive. Yes, they can manipulate all the numbers they possibly want, but what happens is that the real economy, I'm talking about the people who are out there purchasing, the people that are out there spending their funds, the people that want to get jobs, this is where it falls apart for the central bankers because they can't control them. Because they can't control how much people make. They can't control if they have a job. They can't control if they spend money. So they have to manipulate everything else to convince everyone that everything is fine. But no one's buying it anymore. Because if they were buying it, they would think, whoa, okay, let me just go spend my money. I feel very comfortable. But when people are losing their jobs, or they hear layoffs in their company, or they're working for retail and they hear store closures, well, they get nervous. And guess what happens when you get nervous? You keep your currency. You don't go out and spend your currency. And this is what we're seeing right now. But like I said, everything is moving from the west to the east. And we're seeing that China, they are building up their One Belt, One Road initiative. They're bringing on a lot of countries. And we can see right now there's a petro yuan, there's a petro ruble. And China, well, they are going to India. They are saying, listen, we have complete openness and we want India's participation to join the One Belt, One Road. And they're saying this is going to be the China-Pakistan economic corridor, and they want India to take advantage of this. Now, is India going to do this? Most likely, yes. And we're going to see many, many other countries join up with the One Belt, One Road system because this is going to handle trade. This is the next generation of trade. It's not going to be by sea. It's going to be by land, by rail. And it's going to be spread throughout Africa. It's going to be spread throughout Asia. It's going to be spread throughout Europe. And the United States right now, well, they're kind of stuck because they haven't joined. The United States has not joined. Even South America is joining up. Venezuela and many other countries are looking at this saying, yes, we're going to be included in all this. And you have to remember, the petrodollar is dying. Countries will not have to hold the dollar anymore in the reserves. They'll send it back, which means trade with the U.S. is going to wither away. And plus, we don't have that much manufacturing anymore. This was done, think about this. This was done on purpose. The central bankers, those in power, knew that the dollar system was going to die. They knew a long time ago that they would have to move all manufacturing out of the United States. They knew that they needed to set this up someplace else. They set it up in China. Just like before World War II, the United States had all the manufacturing. This is why they already made plans way before World War II to have the United States become the reserve currency and take it away from England. And what we're seeing right now is now it's being shifted over to China. And they made plans to move all manufacturing out of the United States. This is why they had NAFTA and all the other stuff. It wasn't to better the United States. It was to make sure that all manufacturing moved outside of the United States. And most of it went to China. And it went to other countries, but most of it went to China. And even if it went to the other countries, they knew eventually they were going to have a trading system throughout Asia, and they were going to be fine. And this is what we're seeing. So this has been planned for a very long time. They knew exactly what they were doing. Of course, here in the United States, people just complained about it. No one really paid attention. We went from a manufacturing country into a service country, and no longer will we be a service country. We will be a third world country. Because how are we going to purchase these goods if we're no longer the reserve currency? If we're not producing? It's going to be a lot more difficult. And this is what's going to happen here in the United States. So we're going to be brought down to the level of other countries. And the dollar or whatever currency they come up with, it's going to be devalued. And this has happened in many countries in the past. And it's going to happen here. So many people ask, well, how can I protect myself from all this? Well, I don't sell gold or silver. I don't sell it anywhere on my site. I don't tell you where to buy it. I purchase it myself. I've been doing it for a very long time to protect my wealth. And my personal opinion, what I've seen over the thousands of years, gold and silver precious metals will hold their value, and it is a great way to ensure your wealth. And when the paper currency is reevaluated, you can take your gold and silver and then get the new currency. And this will maintain your wealth. Because think about it, when the dollar is devalued, you can use the gold and silver and say, here is my wealth. Why do you think China, Russia, and many of the other countries around the world, they've been continually buying gold, adding it to their stores? Because they know eventually they're going to need it, because they're going to use it to protect the wealth of the country. And we can see right now, you need to do the same exact thing, because as we head down this road of the dollar collapsing, as we have this reset and everything is moved to a different system, you're going to have to say, okay, I have paper dollars, and those are maybe devalued to pennies on the dollar, but I also have this gold and silver. I might even have land. I might even have some stocks, but all of that will protect your wealth. So get ready, get prepared, because it looks like we're getting very close where this system is not going to be able to chug along anymore, and it's going to start falling apart. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.